Welcome to the Deep Dive. Today we're taking a close look at National CineMedia's second quarter 2025 earnings. We've gone through the call, pulled out the key insights.
Yeah, this deep dive is all about unpacking NCM's recent performance, their strategic pivots in what seems like a pretty challenging ad landscape.
And what management is signaling for the rest of the year and maybe beyond. We wanted to give you a shortcut to understanding what really matters here.
Exactly. So let's maybe kick things off with the headline numbers.
Good idea. Let's start with that quick snapshot. National CineMedia reported a GAAP EPS of negative $0.11.
Okay, so that was right in line with what analysts were expecting. Basically a loss of 11 cents per share by standard accounting rules.
Right. No surprise there. But the revenue picture was a bit softer, wasn't it?
It was. They reported $51.8 million. That actually missed the consensus estimates, and it represents a 5.3% decrease compared to last year.
Okay, so a top-line miss, and what about profitability? Adjusted OIBDA.
Yeah, that also saw a pretty significant decline. Came in at just $0.7 million. Compare that to, $7.6 million in the same quarter last year. A big drop.
Wow, okay. And breaking down the revenue, national versus local ads?
National ad revenue was $41.2 million, which was, a slight dip. But the more pronounced impact, maybe the more telling one, was definitely in local and regional ads.
How much was that?
Just $6.4 million. That's down quite notably from $9.8 million last year.
That specific drop in local and regional, that feels significant. Those advertisers often react quicker to economic jitters, right?
Exactly. They often have tighter budgets. They're quicker to pull back. So
Right.
You can see them as a kind of barometer for overall ad sentiment, maybe even more than the big national brands sometimes.
And the market reaction reflected this, I assume.
Oh, absolutely. There was a noticeable negative move in the share price right after the earnings call. Investors were clearly concerned about, the revenue miss and these cautious signals on the ad front.
It highlights that sensitivity to broader economic conditions, even as they're trying to innovate.
For sure.
Okay, so these numbers paint a clear picture of a challenging quarter. Let's unpack this. What exactly, according to management, led to this difficult operating environment in Q2? What were the main headwinds?
Well, what's interesting here is that management pointed directly to heightened caution among advertisers, especially across key areas like government, consumer packaged goods, CPG, and automotive.
Why the caution? What did they attribute it to?
They attributed it largely to broader uncertainty around things like tariffs and also evolving government spending priorities. I mean, it got real enough that some budgets that were already submitted actually got withdrawn.
Wow, withdrawn completely.
Yeah, because of this sort of macroeconomic unease. Now, they did say June showed some early signs of stabilization, but the softness they saw mid-quarter, especially in May, that really hit the overall Q2 results pretty hard.
Okay, and it sounds like the box office itself, there were some unexpected hits, right? But that didn't fully translate into ad revenue. Why was there a disconnect there?
That's a really crucial point. You had films like the Minecraft movie, Lilo and Stitch, Sinners. They actually performed well, got people into the seats, but their success happened largely during what's typically a seasonally slower period for advertising.
Ah, the timing.
Exactly.
Yeah.
Think about it. Summer blockbusters often hit when brands are maybe finalizing bigger campaigns or just pulling back for a quieter period. So the timing limited NCM's ability to fully, monetize those eyeballs. The demand for ad inventory just wasn't as high right then.
Which raises the question, how are they adapting? How do you capture those ad dollars when the timing isn't perfect?
Right. And this challenging environment is clearly pushing them to rethink their approach, which brings us to their strategy.
Yeah, let's dig into those strategic countermoves.
Yeah.
I heard a lot about programmatic and self-serve platforms. They seem to be really leaning into that.
They are. We heard that programmatic advertiser volume grew by over 50% just quarter over quarter.
50% in one quarter.
50%. And maybe even more interesting, approximately 70% of those programmatic advertisers were new to NCM. They hadn't advertised with them before.
That's huge, getting new clients through that channel.
It is. And they've got ambitious plans. They said they plan to triple their programmatic footprint by the end of 2025 and then accelerate that even more into 2026.
Tripling it, that sounds... Well, ambitious is the word. What are the biggest hurdles in scaling programmatic that quickly in a cinema environment?
Yeah, it's a significant shift. For anyone less familiar, programmatic basically automates the buying and selling of ad space. Makes it faster, more data-driven, much more flexible than, the old way of manual negotiations.
Right.
For NCM, this is potentially transformative. Cinema advertising has traditionally been seen as more rigid, needing long lead times. Programmatic helps them tap into entirely new advertiser segments.
Like performance marketers.
Exactly, those performance-focused buyers who want more agile, closer to campaign date solutions. The biggest hurdle, probably integration and just educating the market. Well, they need to make sure their inventory is easily available on the platforms, the DSPs, where advertisers actually buy programmatically. And then they have to convince those advertisers that, yes, cinema can offer the flexibility and targeting they expect from digital channels.
Got it. And this self-serve platform.
Also showing strong traction. Revenue there was up over 30% year over year. This really helps them capture what's called the scatter market.
Ah, the last-minute ad buys.
Precisely. Advertising bought closer to airtime, not way up front.
Yeah.
And that scatter market now apparently represents a significant chunk, like 40% of their national on-screen revenue.
40%. So these flexible platforms are becoming really crucial then.
Undeniably important. It shows where the ad market is moving.
Okay, they also talked quite a bit about their Bullseye AI-powered product.
Yeah.
Can you elaborate on what that is? And crucially, is there evidence it actually works?
Right, Bullseye. So this is NCM's hyperlocal targeting data product. It leverages their own data platform, which they call NCMX. Think of NCMX as the engine, and Bullseye is the tool using that engine for really precise targeting within the cinema.
Hyper-local in a movie theater, how does that work?
Well, they gave a pretty compelling example. A national telecom brand ran a campaign using, get this, 253 different AI-generated ads.
253 versions.
Yeah, each one tailored to specific local cinema audiences. And the result, they reported double-digit gains in foot traffic to the locally promoted stores within just 2 weeks.
Double-digit gains in foot traffic. That's tangible.
Very tangible. And importantly, it led to a renewal from that client. So management suggested they are, quote, ahead of the curve in delivering this kind of personalized advertising at scale in a cinema setting.
Okay, ahead of the curve in cinema, maybe. But
Yeah.
how does this kind of targeting stack up against what advertisers can already do in the broader digital ad space? And what does at scale really mean for NCM compared to, say, social media or connected TV?
That's a fair challenge.
Yeah.
Look, many digital platforms offer incredibly granular targeting, no doubt. But what Bullseye offers is kind of unique within the context of the cinema environment itself.
What's the unique part?
It's not just reaching someone, it's reaching them in that specific environment. Dark room, phone likely put away, fully immersed in this huge visual and auditory experience. That's the cinema attention advantage they keep emphasizing.
Right, the captive audience argument.
Exactly. So at scale for NCM means delivering hundreds of these hyper-localized ads across their network, which spans thousands of screens. They're trying to create an effect that rivals digital precision, but capitalizes on that unique immersive impact only cinema offers. It's a key distinction they're trying to sell.
Okay, that makes sense. Beyond these tech innovations, what about more traditional stuff? Partnerships, capital allocation. There was news about AMC, right?
Yes, spot on. A new agreement with AMC actually went into effect in Q2. This is pretty significant because it standardizes show formats across their network.
What does that mean practically for advertisers?
It means more consistency, more predictability in where and how their ads are shown. That should improve NCM's ability to meet demand for both the premium pre-show slots and also the post-show inventory. Basically streamlines the buying process.
Okay. And on the capital front, dividends, buybacks.
Yep. They've reinstated a quarterly dividend, $0.03 per share, which works out to $1.12 annualized. The first one was paid out August 29th.
That's a positive signal post-restructuring, surely.
Absolutely. It's a clear signal of commitment to shareholder returns now that they're past the bankruptcy proceedings. Especially since they now have, and this is key, zero outstanding debt.
Zero debt.
Zero debt and a healthy $40.3 million in cash and equivalents on the balance sheet. That gives them a lot of flexibility for growth or more shareholder returns. It's a strong position.
And buybacks.
They continue those two. Bought back 3.3 million shares for about $18.8 million so far this year.
Okay, so they're actively returning capital. Given all this, the Q2 challenges, the strategic shifts, the capital returns, what's the outlook? What are they guiding for Q3 2025?
All right, for Q3, NCM anticipates revenue between $62 million and $67 million.
Okay, so a sequential step up from Q2's $51.8 million.
Exactly. And adjusted OIBDA is projected in the range of $7.5 million to $11.5 million. Again, a significant improvement from Q2's $C.7 million.
So they're expecting a recovery. What's driving that optimism?
Management definitely expressed a sense of optimism for a sequential recovery. They cited some early encouraging indicators, ad sales commitments that are actually pacing ahead of last year's levels at this
The
point.
ahead of last year, that's interesting.
Yeah, and improved visibility into their sales pipeline. It suggests maybe these programmatic and data initiatives are starting to gain some traction.
That improved visibility sounds really important, especially you mentioned Q3 is historically weighted towards the first half of the quarter, right?
It truly is. They noted the majority of Q3 revenue usually comes in July and August. So by the time they gave guidance, they already had a pretty good handle on how those key months were shaping up.
Which gives them more confidence in the outlook.
Right. And demand is apparently normalizing across important categories like automotive, wireless, retail, travel, all crucial for their ad business.
Okay, but what about the box office in Q3? I heard it might be down.
It is expected to be down year over year. Yeah.
Yeah.
That's mainly due to really tough comparisons against Q3 2024, which had huge hits like Deadpool and Wolverine and Despicable Me 4.
So lower attendance expected, but they still see revenue recovering.
Yeah, because NCM anticipates improved utilization of their ad inventory, basically selling a higher percentage of their available ad slots. And they expect relatively stable CPMs, the cost per thousand impressions. So better yield even if overall traffic dips slightly.
Got it. Sell more of what they have. Looking further out then, what's the bigger picture, the long-term strategic vision here? Where does NCM see itself going?
Well, the stated goal is to evolve from just, post-bankruptcy stabilization to becoming a true data-driven cinema network.
Data-driven cinema network, okay.
The long-term unlock for multiple expansion, meaning getting investors to value the company higher, is showing consistent proof that these programmatic tools and analytics can actually smooth out the usual seasonality in their business and bring in broader demand.
So proving cinema ads can be as flexible and targeted as digital.
Essentially, yes.
Yeah.
Showing it's not just a niche buy anymore. And of course, they're also banking heavily on a strong slate of upcoming tentpole movies.
Which ones?
Big ones. Wicked for Good,
Yeah.
Avatar, Fire and Ash, Zootopia, Tron Ares. They need these to drive box office acceleration in Q4 2025 and beyond. Those huge engaged audiences are what advertisers ultimately pay for.
Makes sense. So this deep dive really shows NCMI as a company in, significant transition. The Q2 revenue miss definitely spooked investors. You saw that in the stock reaction.
Oh, sure.
But management on the call clearly wanted to focus the narrative on the strategic pivot, moving past those traditional headwinds.
Indeed. The immediate investor focus was absolutely on that Q2 underperformance and the sort of lingering uncertainties in the ad market. Can't ignore that.
But the key question going forward seems to be,
Can these new tools, the programmatic expansion, the Bullseye AI tech, can they actually offset weakness, especially in that vulnerable local regional segment? And can they establish a more consistent, reliable top-line performance? That's what will be key for future performance and getting that higher valuation, that multiple expansion we talked about.
proving they can generate revenue reliably regardless of the macro winds.
Exactly. It's about de-risking the business model in the eyes of investors.
And they're also consciously positioning themselves against the rise of competitors like ad-supported connected TV, right? CTV is huge now.
Absolutely. That's a major battleground. NCM constantly highlights its cinema attention advantage over TV and streaming.
The immersive format, captive audience thing again.
Right. Broad reach, immersive format, national scale, focus attention. While they definitely acknowledge the rise of ad-supported CTV, they're actively building these programmatic platforms to compete directly in that same digital ad buying space by leveraging their unique assets. That younger demographic skew compared to traditional TV, and this new ability to deliver personalized, localized ads, but on the really big screen.
So using digital tools to enhance the cinema proposition.
Precisely. The long-term catalysts everyone will be watching, obviously the Q3 earnings report, then the strength of the crucial holiday box office season. Any news on further programmatic partnerships?
Yep.
And continued updates on shareholder returns, dividends, and buybacks.
So while the stock, NCMI, has lagged the broader communication services ETFs, that's XLC, over the last 6 months or year, the story here feels far from over. It's really a fight for attention in a super fragmented media world.
Couldn't agree more.
All right, that brings us nicely to our This Is Not Financial Advice segment. Time to pitch an outrageous but plausible trade idea based on everything we've just discussed. Your turn.
Okay, all right. So given NCMI's Q2 miss, which is weighing on the stock, but also this really strong strategic pivot they're making, my trade idea would be maybe going long NCMI through out-of-the-money call options.
Out of the money calls. Okay, explain the thinking there. That's inherently speculative.
It is, absolutely. These are options that only pay off if the stock price moves up significantly above its current level by a certain date, say expiring Q1 2026. So it's a bet on a strong rebound.
And the rationale.
The play here is that the market, right now, seems overly focused on the Q2 revenue miss and that short-term ad market volatility. Understandable, but maybe short-sighted. However, you have management explicitly stating this goal to triple our programmatic footprint by year end. That's huge potential leverage. Couple that with the anticipated reacceleration of the box office during the really critical Q4 holiday season driven by those big tentpole movies we mentioned.
With it, Avatar, etc.
Exactly. That combination creates, I think, significant potential upside that might not be fully priced in yet. If those two strategic pillars, programmatic growth and a strong box office, really deliver, and especially if Bullseye keeps gaining traction and proving its ROI to advertisers,
then NCMI could see a substantial re-rating.
that's the bet. It's not just a simple recovery play on the ad market improving. It's really a bet on their transformation into this data-driven cinema network that's leveraging attention economics in a pretty unique way.
That is certainly aggressive, definitely fits the outrageous but plausible bill. But is the market really ready to buy into that long-term vision right now, given the short-term headwinds? Or is there still a mountain of skepticism they need to climb?
Oh, absolutely, there's skepticism. And that's precisely why it is an outrageous but plausible idea, right? That skepticism is arguably baked into the current stock price.
Creating the potential upside if they execute.
If they execute, exactly. It requires a leap of faith, no doubt. Betting on that programmatic ramp and a blockbuster Q4 to overcome the current cautiousness.
Okay, a fascinating, if risky idea. That wraps up our deep dive into National CineMedia's Q2 2025 earnings call.
Yep. We've seen a quarter with some definite headwinds, especially on that revenue line.
But also a company that's not sitting still. Actively implementing these strategic initiatives, programmatic, Bullseye AI, leveraging that content slate to try and drive future growth.
The focus now is clearly on delivering that Q3 recovery and aiming for a strong finish to the year. Really trying to leverage that unique cinema attention advantage while also keeping shareholders happy with returns. It's a classic story, isn't it? An old media company trying to reinvent itself using new media tools.
It really is. As always, please remember that this deep dive is for informational purposes only. It is absolutely not financial advice.
Please do your own research. Consider all the factors before making any investment decisions.
Thank you for joining us on the deep dive. The big question remains, can NCM successfully bridge that gap between the traditional big screen experience and the agile, data-driven demands of modern advertisers?
We'll certainly be watching.